This is a daily market rundown live from the Tradelo trading floor. It's July the 11th. Some highlights from today's show. The EU is bracing for their tariff letter. Liberation Day playbook is now in play, and the euro-dollar retracement is complete. Good day traders, happy Friday and welcome to the penultimate trading session of the week, and it's set to be a very lively one, so let's get stuck straight into it. Overnight, of course, again it's now back to the tariff narratives, given that the big beautiful bill is done, given that the war between Iran and Israel is settled. Ultimately now Trump has basically taken his focus and put them squarely back on the tariff situation. Now, before we get into this article, I think there was a very interesting discussion in the FT this morning about Bessent was at a dinner last night, and ultimately Scott Bessent was asked a question by one of the reporters to say, well, look, can you tell us what it's like working for Trump versus your old boss George Soros? And he pretty much summarized it as Trump is very impatient, and ultimately he has to constantly remind Trump to just be a little bit more patient. Now, I think it's quite pertinent. The timing of that sort of question and how he answered it speaks volumes for ultimately how the president sees things. He sees things a little bit like day traders do, which is in real time. We want to get paid quick. We want to see outcomes quick. And I think Trump is no different. Okay, now, why does that matter? Well, we can see that this week has been all about letters and sending letters to some of the key trading partners. But all week, President Trump has been very hush about ultimately the EU situation. Okay, now where things do currently stand in the EU is we know that there's been some positive noises about they are nearing a deal. We know the EU has told us that they believe they can secure the 10% baseline tariff. Now, why I think this is ultimately perhaps false belief is simply because we have not yet seen a single country that has a significant surplus with the US receive anything other than some form of reciprocal tariff. In other words, if you go back to Liberation Day, the way the Trump administration did things was everyone with a significant surplus got a more than 10% tariff, okay? And everyone with little to no surplus got the 10% baseline. Now, the EU is saying they believe they can get the 10% baseline despite the fact that they have a significant surplus. Okay, the reality is that the EU is going to have to give up some significant leverage to the US in order to secure that 10%. And so far as I can read and see, I've not heard any noises about significant give-ups that they are actually giving to the US in order to reduce the surplus. Okay, in other words, where I'm going with this is I expect the EU is going to get a letter. I expect it's coming perhaps today. And I expect the market is kind of already starting to price a little bit of that. Okay, now why does this matter? Well, overnight, of course, Trump hit Canada with a 35% tariff. This is a lot higher than ultimately what they received on the Liberation Day. We, of course, know that if that's how they're going to treat Canada, perhaps they're going to treat Mexico in the same way. Now, again, Canada specifically, obviously a lot of goods and services do fall under the NAFTA agreement, so they will of course not succumb to this 35% tariff. But the point is that we can see that the president is getting itchy feet. He is starting to get a little bit more aggressive with some of his trade partners, and I expect that the US is about to take aim on Europe. Okay, now with that in mind, the market thinks the same thing. It's not just my thinking, it's the market's thinking, because we can see ultimately, if we go and see how some of the markets are trading, notice how the DAX is trading. Okay, massive underperformance today. If we compare that to the US, S&P, it's only down about 0.5%. Okay, so the DAX is the big underperformer, and don't forget, we saw Europe start to outperform again this week. So the fact that the strong market's now weak very much does lean into this idea that perhaps the market is also starting to think that we're about to see some form of a letter go towards Europe. Now, we know that ultimately the EU wants 10%. We know that ultimately the Liberation Day was 20%. We know that ultimately the EU threatened to retaliate, and then the Trump administration said, well, fine, we'll give you 50%. Okay, the point is we know that a good case scenario would be if Trump gave them 20%. Okay, if Trump gave them 20%, we would think that's sort of, in terms of the worst scenarios, that's the best case for the EU. If he goes anywhere beyond that 20%, okay, if he was to go back to that 50%, that'll scare the living shit out of the markets, even though the taco trade is alive and well. Why will it scare the markets? Well, because if it goes back to the 50%, ultimately you got to ask yourself, what is the probability that the EU will actually ever get close to that 10%? Okay, the probability is very, very small. and that the high probability play is that they're probably going to get that 20% that was lumped on April 4th. Okay. Now, why does this matter? Well, because the markets are still thinking that the marginal tariff rate for the US is going to be around 12.5%. Okay, EU is the biggest trade partner, so if it's going to be closer to 20%, well, guess what? That marginal 12.5% is going to be substantially higher. Okay, even if there is still time to negotiate. Okay, and that's why anything more than 20% for EU is going to be problematic in so many different ways. Okay. However, let's talk taco, because yes, the market will trade the taco trade. Yes, they will try and look past it to an extent. But ultimately, what we have to say to ourselves is, fine, you'll get the fast money move. You might then get a little bit of a bid up, but don't forget how bid the markets are. Okay, right now, risk markets are perhaps pricing in no real risk around the tariff situation. They really are quite confident that 12.5% will be the marginal rate. So even if we get just a little bit of hedging taking place, we could see some decent downside moves in the risk markets, just given contextually where they're trading. Okay. Now, with that in mind as well, we can of course see that the cryptocurrency space, that is a continuation of the theme that we've seen over the last couple of days. That has punched up through. We can see now quite a strong week and performance from both Bitcoin and Ethereum. I do expect if we got a little bit of EU letter, some of the profit taking will happen in that space. Will it completely reverse? No, I don't think so. I think there's probably going to be a dip buying opportunity in the cryptocurrency. At least in the near term, I do think cryptocurrencies will remain supported, and they should hold on to the bid. Now, in terms of the currency space, I think this is where we're going to start to learn about the market's thinking around how to play the tariff situation. Okay, so think Liberation Day, think the playbook we adopted then. It was very much about shorting bonds, particularly US bonds, versus long European bonds in terms of DAX, in terms of German bonds. Okay, the other plays were long gold as well as short dollar and long some of the safe haven currencies like the euro, like the Swiss franc. Okay, and that's what we can see this morning. If we look across the board, we can see that ultimately the safe haven currency, Swiss franc, up 0.13. Pound down 0.27. Okay, euro mostly flat, but the euro against the yen, the euro against the pound, up 0.3, 0.2. Okay, in other words, we can see those safe haven flows favoring, of course, the likes of the euro and the Swiss. If we then look at the CAD, this is where that taco trade is alive and well. Notice how the CAD is effectively only down 0.26 against the dollar. In other words, the market's looking past it. It's not looking at it as though that is going to be the tariff situation. Now, again, it's not just that they're looking past it. It's also got a little bit to do with the NAFTA agreement, as well as, of course, there are some other giveaways within the current situation. So it's not all doom and gloom for Canada, and there is, of course, still this belief that they've got time to negotiate a better deal. Okay, now a few things to notice and pay attention to before we get on to some of the other trades to watch very closely over the course of today. What we can see in the overnight session, and this is not the first time we've seen this. If we go back to the copper announcement a few days ago, earlier this week, if we go back to a number of different announcements, seemingly the data or the Truth Social posts are being leaked early, or at least someone is trading off of them. Okay, because what we can see, and this is the overnight session in the ES, what you can see is the vertical line is ultimately where the news came out. Okay, so that's where the Truth Social tweet came out, right there on that vertical line. Okay, but what we can see prior to that, notice how there's a significant pickup in the volume and obviously directional play almost a good 15 minutes before. Okay, so the fact is you got to keep an eye on those charts today. If you see a little bit of weird volume coming in, a little bit of one directional move out of nowhere, you do want to be front running that because you're about to get a Truth Social from Trump. Okay, keep a very close eye on that. I do think you'll see something in the markets. You'll see it particularly in the thinner markets, and in particular keep an eye on the DAX. Okay, I think the DAX is ultimately going to be very sensitive to an announcement in terms of tariffs, and so watch that space carefully. You see a little bit of random volume coming in, a little bit of directional play. Of course, it does suggest that someone's got the Truth Social, and we're about to see that letter being delivered. Okay, keep an eye on that. Of course, you can also go look at copper. It was the exact same thing. Copper was up 6-7% prior to the announcement, and then of course we know what that did. It rallied another 6-7%. Okay. Now, moving on, some of the other plays to watch out for. We learned this from the Liberation Day in that ultimately it's not a good situation for bonds, this higher tariffs. Now, over the course of this week, you can see in terms of the US 10-year, this is the 10-year chart daily, you can see we started to see a little bit of a bid up in yields again. We, of course, topped out at 444 earlier this week, but ultimately we started to give back a little bit. I do expect yields start to push again today, should we get, of course, an announcement for the EU. Again, don't be surprised to see yields push a little bit higher in the US, and then, of course, in Europe, we know that yields will be a lot better tamed. So if you're trading the spread trade, i.e. long German bonds versus short US 10-year, that is a very good Liberation Day playbook type trade. Okay, so it's very much a case of a spread between bonds and US bonds and EU bonds. It's very much a case of long gold, very much a case of long euro, long Swiss, again short dollar. It's very much a case of short risk. Those are going to be the key tariff plays, should of course the EU receive their letter today. Now, they might not get it today, okay, but there is a very high probability, and the market will be thinking this, that they get something over the weekend. Okay, keep a close eye on this. What this means is you could have a very interesting close, and of course, if we did get some news, it does bring in some of the Sunday gap plays. So again, going into this weekend as a day trader, long of risk is not a good idea. This is not a weekend you want to be long, because there's a very high probability of some form of event risk over the course of the weekend. Okay. Now, one final note, as part of the playbook there, you can see the currency rebasing. And just to showcase it to you, there is our Liberation Day, somewhere at the start of April. We can see the three best markets to trade on Liberation Day was Euro, Swiss, and Yen against the dollar. We can, of course, see some of the other currencies like CAD and Pound do well. Okay, they didn't do poorly, but they did underperform. Okay, now more importantly, what you can see since sort of the middle of June, you can see how ultimately the Euro and Swiss again continue that rally, with all other currencies moving absolutely sideways. Okay, they are the outperformers, they are the star of the show. They've both pulled back a little bit sideways in the last couple of sessions as we've seen the US data improve a little bit, but they are both ready to go again, should we of course see some risk off come today. Now, before we get over to our play of the day, oil chart looks interesting. Of course, we have heard news overnight about some sanctions. Trump is going to tell us that if the war doesn't end over the weekend by miracle, he's about to hit Russia with some aggressive sanctions. Now, there is some speculation as to what this could be. Could be the Graham bill that's being passed around, which is a 500% tariff on any country importing oil from the Russian country. So the key takeaway is we're going to find out more about that perhaps on Monday. The general thinking is that should the Graham bill pass, or should that be imposed, the likes of China and India will both get hit particularly hard. Those currencies will come under some significant sell-side pressure, as well as the indices in China and India. So keep a close eye on that. I think they're two economies that are highly sensitive to Russian oil, and they do demand a lot of Russian oil. So that is one thing to pay attention to, and I think ultimately that could be a play for Monday. It of course will be quite positive for the WTI front month. So again, we'll be paying very close attention to oil come Monday. But right now, just in terms of where oil is, it looks as though we are going to retest this trend line again. Again, be careful with this idea of a trend line. We are going to retest $66 a barrel. Don't be surprised to see the market ping off there, perhaps close a little bit unchanged today. Okay, oil looks like it's good to be long of into the weekend, given of course those sanctions ultimately are set. We are set to find out about those sanctions, of course, on Monday, but it doesn't mean we might not get a bit of news leak over the weekend, which is why I think long oil into the weekend is perhaps a very good risk reward play. With that in mind, our play of the day is very much squarely on the euro. It is a market that it's been trending all year. I think the key takeaway from this chart with the moving averages is we can see that the euro rally really started in Feb. Okay, it was well before the tariff situation. The euro was bid up as a result of ultimately the German government saying we're going to spend. Okay, that's what sort of started all of this, was this idea of, you know, they're going to start growing again in Europe on big fiscal spending. We then had the Liberation Day tariffs, of course, come in April, and that really gave the next leg to the euro from 110 up to 115, and then ultimately we've just been, you can see this blue line, we've just been holding on to this 20-day moving average. We've almost tested it in the future session today. We're about 20 pips shy of that, but I do expect the euro now to perhaps move its way back up towards that 118. It has pulled back almost 150 pips over the course of the last week and a half, 2 weeks, with perhaps a little bit of dollar sympathy buying. But like I said, the euro is a firm buy. It's very, very technically strong. It's fundamentally very strong. And should the EU receive their letter today, that might initially put a little bit of an off in the euro, but I do suspect that's going to give you the perfect fill to then, of course, trade it back up towards the 120. Okay, it's very much a market that's in play. And if we go and look at the candlestick chart, you can see we are holding on very nicely to this trend channel. Again, you can see, it's not so much about where the trend channel comes in, but it's about this idea of making this series of higher lows. Okay, keeps getting bought on a higher low. Should we get that little letter today? Maybe get a little extension there, but I do expect this to start to move up towards the upside. Now, in terms of what's driving this, there's a number of things. Like I said, fundamentally, we can see, of course, the US curve is pricing in another 117 basis points between now and the end of next year, and we can see the rates curve in Europe is flat. In other words, not expecting too much more in the way of cuts. Okay, so there's a number of things supporting the rally in the euro, whether it's risk off, whether it's safe haven, whether it's money moving out of the US into Europe for diversification, whether it's rate differentials. There's a number of different reasons why the euro is set to sustain this trend in the near term. Okay, now with that in mind, our other play very much focuses on the equities and in general the risk sentiment. We've done a lot overnight. I think that's the place to start off with. We are down 0.6%. Now, if we look at the implied vol, we've kind of almost done the whole expected move in the overnight session. We call this a bit of a wide IB or a wide overnight session. Typically, wide overnight sessions do struggle to extend unless there's a catalyst. In other words, what that means is we could well trade within the overnight session for the whole session today. Okay. However, I think there's going to be a little bit of a lean today in terms of perhaps a little bit of weak sentiment, and it's very much going to be confirmed early in the session. Okay, if you look at the SPX around 62.50, that's going to play a very, very important role in today's session. It comes in around the 62.90 in the future, so keep a close eye on that 62.90. If that cannot be scaled, if we cannot get above that 62.90 to 6300 level, I do expect the market just to move lower over the course of the cash session. And then ultimately the key to the session is going to be, should the market hold on to the overnight lows? Fine, we'll probably just settle into a bit of range-bound trading. However, should we start to see a little bit more sell-side activity come in, perhaps we see some more puts being put on given the situation with regards to the tariffs for EU, that catalyst ultimately is going to move the S&P lower into levels where you can see with this negative gamma is perhaps going to become more negative, and we're going to see more forced selling, more forced hedging. Okay, it's one of those where the market will probably be range bound until we get a catalyst. And if we get that catalyst, if we get that EU letter and we start to see some offers come in, it's going to bring more offers in. That's how you have to see today's session. It's very much range bound until that catalyst comes in. And like I said, 62.90 in the futures is the key level to watch out for. Okay, with that in mind, it is a Friday. It is a day where ultimately we're going to have to pick our fights. Like I said, be careful being long of risk into the weekend. If you trade cryptocurrencies via the future space, again, be careful with that as well. Of course, you won't be able to exit those trades over the weekend with the futures via CME being shut. Otherwise, if there are any other questions, do post them in the Discord channel. Don't forget to like and subscribe and share the channel. It does help. It makes sure we keep going with this project. We keep sharing these streams for free. Otherwise, good luck out there. Manage the risk. Go make some money.